Hello, we're back again. Today, we just looking at the market roundup with regards to what has been happening in the crypto market for the past 24 hours. It's important for all of us to understand where the market is at the moment. It offers the opportunity for entrance or consolidation, because the market is in a consolidation phase, so you can accumulate, or depending on what your trading strategy is, you can decide what to do. If we look at what has happened over the past 24 hours, the crypto market has experienced a significant turbulence with the notable downturn on major coins. BTC dropped below $86,000, with some reports citing as low as $82,000, erasing over $110 billion worth of total crypto market cap. And this marks its lowest level since November 2024. Ethereum followed Bitcoin's decline, with heavy liquidations signaling weak support among its holders. If you look at the other altcoins, like Solana faces pressure from an impending large token unlock, while XRP and Doge 8% drops, and lower cap coins showed mixed performance with some resilience and amid rotation from majors. Panic is widespread in terms of the market sentiment, fueled by rumors of the Bybit hack, that 1.5 billion hack on Bit that we spoke about, the profit taking by prominent figures like Binance's dumping meme coins. Over 1.2 billion in bullish liquidations have occurred, with Bybit alone reporting the 600 million, which was wiped out. That's what we had spoken about yesterday. The total market cap has declined by approximately 6.6%. with the CD20 index at the top coins excluding stable coins down by 7%. This aligns with a broader risk-off mood tied to yen strength and weakening Nasdaq futures. And if you look at the Bybit hack rumors, there's that suggestion that about 1.5 billion was hacked. What has been unconfirmed by some offside reports, but we know it's between 1.4 1.5 billion, depending on where the market is at that point in time. And this could trigger a lot of sell-offs. That's why we were talking about the $600 million sell-offs on Ethereum that we had noticed. This is a historical precedent. If you remember 2022, we had FTX collapse, which caused 20% drop on BTX. All right. And it was within days, hinting at a potential downside if that escalated. This is reminiscent of those days, right? All reports of Binance CEO Changpeng Zhao CZ dumping meme coin holdings indicate large players may be exiting speculative positions, adding selling pressure, which creates another selling pressure. But we did speak about tracking the whale's wallets in the previous episode, so this is just confirming those things. On the on-chain data, we have CryptoQuant showing 1.7 billion in BTC that has been distributed across February. This is the largest capitulation since August 2024, suggesting that long-term holders are cutting losses. Now we know this would be new money. Maybe the institutional funders that have come in during the exchange-traded funds. It's important to understand long-term players in Bitcoin would hodl, because the value of Bitcoin over the medium to long term will go up. There has been capitulation, and it's been comparative to the capitulation of August 2024. If we look at the macro, the yen strength and the declining Nasdaq futures reflect a risk-off shift in global markets, often dragging crypto down as a correlated asset. And the weak economic data could paradoxically support a recovery if it prompts the US Federal Reserve to signal the rate cuts, boosting liquidity. The Solana unlock is another major event. An upcoming large SOL token unlock risks flooding the market with supply, potentially depressing its price further and impacting altcoin sentiments. Lower cap coins outperforming majors suggest traders are rotating into riskier assets, possibly anticipating an altcoin season if BTC stabilizes. But if we look at the bearish factors really, is the exchange instability, whale exits, and macro risk-off sentiments dominate, with potential for deeper correction if the Bybit situation worsens or SOL unlock triggers panic. What are the bullish factors? The capitulation events often mark bottoms, and the Fed rate cut speculation could spark a rebound. US crypto-friendly policies under Trump administration remain a long-term tailwind. These are the indicators that will drive the bullish or the bearish side. Now, let's go to our technical charts and look at the price action. BTC fell by fell from $95,000 to about $82,000. And it was between $82,000, $86,000. It has breached the $92,000 support, which was the November low, and is now testing the 50-day moving average, which nears around $85,000. The spike in the selling volume accompanies the drop, with the 1.2 billion in liquidations amplifying the move. That's what we're talking about. A 14-day RSI has dropped to 35, nearing oversold territory, hinting at a potential bounce if buying resumes. The 50-day moving average, which is $85,000, is under pressure. A break below could target the 200-day moving average, which is near $76,000. From the all-time high on December 17, 2024, to the $82,000 low, the key retracement areas are the following. If you look at your 0.618, you are looking at $92,000, which is broken. So now we are looking at the 0.786 fib retracement point, which is sitting at $87,000, which is the current ground. But the 0.618 with it. So that's a very important fib retracement level, the 618. So if you look at the full retracement now, the next major support in terms of your fib retracement will be the $76,000. So that's what will be expected. If you breach the $87,000, you may now be settling on the $76,000, which is the next fib retracement level. If we look at the alts, and Ethereum is mirroring what's happening with BTC. It has dropped below 3,400, testing the 3,200 support. The RSI is sitting at 38, which suggests oversold conditions are approaching. If you look at Solana, Solana is down 14% to around $150, nearing the $140 support ahead of the unlock. So high open interest indicates leverage positions at risk on Solana. Hence, I had said we shouldn't take leverage. If you look at XRP Doge, 8% drop reflects altcoin weaknesses, with XRP sitting at $2.30 and Doge sitting at 22 cents, both testing their 100-day moving averages. So the total market cap is down 6.6% to about $2.8 trillion, testing the 21-day moving average of $2.75 trillion. And BTC's dominance is steady around 55 to about 57%, right? Suggesting the altcoins are not yet decoupling significantly. If we look at the bull scenario, let's look at the bull scenario. And I want us to look at the conditions for the bull. That the conditions for the bull will be the capitulation bottom, it will be the Fed rates cut, and then the technical bounce. So if we look at the capitulation, really, if you look at the fact that $1.7 billion loss distribution signals a flush out of the weekends, often a precursor to the reversal. If you look at the August 2024 bottom, it was $49,000, which led to a 100% rally. That's what we're looking at as the capitulation. Then the weak economic data prompts dovish Fed signals, injecting liquidity and lifting risk assets. So the Feds would have to take a decision around QE. May not necessarily be QE, but it will be the easing of the interest rates, which will provide liquidity. So that's the second thing that will assist. If you look at the technicals, the BTC holding between $82,000 and $85,000, if we can reclaim the $92,000 level with RSI exiting the oversold territory, this becomes a good indication. So if we're projecting into the next 1 or 2 weeks in terms of our projection, we're looking at the rebound to $95,000 or $100,000 in a bullish scenario. So it will be retesting then the prayer consolidations. And Ethereum, we're looking at the recovery between $3,800 and $4,000, which will be fueled by the DeFi momentum, right? Liquidity that goes into the DeFi narrative. And then the altcoins, if Solana stabilizes post-unlock between $160 to $170, and the low cap coins rally 20 to 50% as the rotation accelerates, that also is another element of what would drive the bull market within within 1 or 2 weeks of what we are projecting. In terms of the timeline, the recovery will begin late February or early March with a broader bull wave into Q2 as the US policy clarity emerges. So your best indicators will be the relative strength index, which the reversal above 30, which is the buying pressure, the golden cross where the 50-day moving average is crossing above the 200-day moving average if BTC holds the $85,000, and then the exchange net flows. This will be the shift to the outflows as coins move to cold storage, reducing sell pressure. What is the bear scenario? Let's talk about the bear scenario. The bear scenario, 3 things: Bybit fallout, macro deterioration, and the technical breakdown. The confirmed had triggered a centralized exchange crisis, eroding trust and prompting mass withdrawals. That's one scenario that the Bybit fallout will do in a bear scenario. The yen strength persists, the Nasdaq continues to drop further, and the crypto correlation intensifies. That's another element of what the bear will be driven by. On the technical side, BTC will breach the $82,000, crashing altcoin sentiment. So those are the 3 indicators that will indicate the bearish scenario. And what is projected in that projection, if BTC falls to $76,000 with hitting the 200-day moving average or lower to $70,000, which is the psychological support, and a 15 to 20% further drop, that's what would be driving the bear market on the projection side. Ethereum dropping to 3,000 or to 2,800, testing the 2024 consolidation lows would also be another indicator. And the altcoins like Solana hitting $120 and $130, or XRP or Doge losing 10 or 20% or more, with further declines maybe of 30 to 60%, that will also be a projection of a bearish scenario. And the correlation would deepen into mid-March with the prolonged consolidation phase unless macro conditions improve. These are the projections of what will be a scenario under a bearish environment. And what are the best indicators we can use? We can look at the death cross where the 50-day moving average crosses below the 200-day moving average, which confirms the bearish momentum, and the sustained high selling volume with low buy side recovery. That will also be driving a bearish scenario. The best indicators really to monitor is the RSI, more especially on a 14-day, just to track the overbought, oversold conditions, right? And remember the overbought conditions, the bull reversal is when we go above the 30% and then the below 70% ones of the bear top. So if you look at the moving average between your 50-day and 200-day, the crossover signal trend shift is important. The 50-day moving average is testing this, and it's a critical point, right? If you look at your on-chain volume or capitulation, so your high loss distribution often marks the bottom. So it's important for you to check. We should be at capitulation at the moment because that's where we have these high losses that we're talking about. The drop below 55% of BTC dominance could indicate strength moving towards the altcoin. A rise above 60% favors a bearish consolidation. So the open interest, the declining open interest, e.g. the drop like 11% that we saw in December, would reflect a deleveraging, and the spike could indicate a squeeze. So it's important to take these things into account. If we conclude our analysis, you could see that with Bitcoin dropping below $86,000, this will trigger a market-wide sell-off amid the heck rumors, whale exits, and macro headwinds. So fundamentally, the market is at crossroads. Capitulation could signal a bottom, but exchange instability risks further downside. $82,000, $85,000 is a pivotal zone for Bitcoin. Holding it favors the bulls, while breaking it unleashes the bear. The bull case, a swift rebound to $95,000 or $100 in that point is plausible if panic subsides and macro support emerges. But the bearish scenario is a deeper correction to $70,000 and $76,000 that point. And that would show that trust has been eroded and the technical support have failed. So traders must definitely watch their relative strength indexes, their moving averages, and just follow the on-chain flows in terms of your volume, right? And then please use the $85,000 point for BTC as a line in the sand to see what is happening. So it's important to make sure that your risk management is on point, because this volatility could spike either way in the coming days. If you remember, we spoke about this is a market that does not favor leverage. It's a market for spot trading. And therefore, what you are seeing now in the movement in the market, the bull trap will give us the retracement that is anticipated to fall around $80,000, some indicating below. Now we are experiencing those. So the market could further capitulate depending on what the fundamentals are. The technicals are telling us where we are at the moment. Use the summary we've just given as the indicator that will show you where is the market pivoting. Is the market pivoting around rebound, or the market is pivoting around breakdown? It's important to use this information as the fundamental layer of your analysis. You can build on top of it going forward. Where we are at the moment, there are a number of traders in the market that are excited that this is the time to enter. I'm not sure whether it is the time to enter, but I can tell you this is the accumulation phase. You dollar cost average your accumulation. So I'm excited about what's taking place, but there is max pain in terms of what other traders have experienced. When CZ is exiting the meme coins, you can imagine the max pain of CZ's exit, because we are talking about a huge whale, the owner of Binance pulling out a position. So the impact that that's going to be, it's one of those things. Now, Pump Fund, as well as Radium on the other side, these are the generators that are generating some of these memes based on the Solana ecosystem. There is rumors now that Pump Fund wants to also have an exchange, which is going to become a problem. That volatile, high-risk sector of meme coins, where meme coins are generated mainly on the Solana ecosystem, there is movement. This is not the time to take the high-risk assets in the market. If you do, take the ones that you know and you follow the narrative and you have done your fundamentals very well. But if you are going to take the medium to low risk, then it's important for you to also be sure of the narrative that you have made a decision around. But the market now is bottomed down from where it was in the couple of months back. And as a result, what that does, it gives an opportunity for further accumulation. And therefore, those that have been accumulating, for example, MicroStrategy has been accumulating. Whenever there's a dip in the market, they buy Bitcoin. But then when you look on-chain data, we've picked up, that's what BlackRock has been doing. And that's what a number of institutions have been doing. Certainly, there are some whales in the market that may not be institutions, but those whales have also been doing the same thing. So depending on what type of trader you are, short-term trader or long-term trader, if you're a long-term investor, it's definitely accumulation, no questions about it. If you're a short-term trader, use what we've provided today to make your analysis to see where the market is at in terms of bottoming down for your bullish scenario, or at in terms of what you're looking at in terms of the bear trap and your bearish scenario, what will happen. Take your positions as your analysis indicate. You can still trade the downward market. You can short the market. Therefore, use these indicators to see where the market is going and take the appropriate action in line with what you are trading. Whether at this point in time you are trading short, at this point you are trading long. It's up to you, but I'm just giving you the choices traders have, what decisions they make, and what positions they take. I wish you all the best. I hope your bag is secure. And these episodes are helping in terms of building your own bag. In the coming episodes, we are going to talk about the top 10 current coins in the crypto market by market capitalization. I'll do analysis on them in terms of what we anticipate will be the performance going forward, so that in the accumulation phase, if you are accumulating, you have a sense of which narratives you should look at or discount based on what we provide as a guide. This is not financial advice. We are providing you assistance that can help you do your own research, trade your own funds, make the best decision, and hopefully succeed in what you want to achieve. Thank you for being with us, and thank you for the time that you take to listen through our episode. I hope that they are helpful. I wish you profitable trades. Thank you very much. Bye for now.